You want to know what are the best stocks to buy now? I've got 7 stocks I'm buying right now. Let's go. Welcome to the beautiful island of Hawaii. I'm on vacation with my family, but I want to take a minute to bring up to speed with the stocks that I'm buying right now at these prices and lower. I don't know if you've ever done this before, but last night I took my family night snorkeling to see manta rays. This was absolutely amazing if you ever get a chance, but you're not here for that. Let's get to the stocks to buy now. This first stock is a cybersecurity giant, and I do believe that it's one of the better buys in the market right now. Now, if you follow this channel, and I hope you do, if you don't, smash that subscribe button right now. But if you've watched recent videos, you know that I've been buying Palo Alto at these prices and lower. If you want more due diligence on this stock, I cover it in much more detail in previous videos. Go back and take a look. But you can see that Palo Alto got down to about $165 a share. This dropped from $210. Now, if you look at the Fibonacci, the S2 here is $162. The S3 is $148 and change. So I told you guys when it was up, 200 plus, I like the stock lower, 175, 185. My preference is really 150, but I think it's very doubtful you get that. So I have been buying this new position in the community portfolio under $175. Most of the buys were 171 or less. Now, of course, guys, with all the buys today, use dollar cost averaging. And just to communicate, most of the buys that when I'm buying a stock, it's usually 3 or 5 years unless the story changes. So long-term investing. Up next, we got the trade desk. The stock is down 40% in the last 5 days since its recent earnings report. The question is the stock a buy now at 53.27 or is it going lower? What should you do? All right, so trade desk released earnings on Thursday, and at first glance, didn't seem that bad. It turns out there are a number of factors that created a perfect storm. I think first and foremost, one thing to note is that the stock was up 100% since the April lows. So that's part of the equation. Decelerating growth, of course, is another part of that equation. So the revenue generated $694 million actually beat analyst consensus estimates of $682 million, up 19% year over year. The problem is it's expensive, and this is decelerating growth, and it's not hyper growth like it once was. Competition, Amazon's mentioned in this article, but you also see online AppLovin. Now, AppLovin's trying to break into connected TV. Hasn't really done so yet, but a lot of people believe that AppLovin will do so. But even without AppLovin nipping at its heels, you also have Amazon here. In fact, in the earnings call, one analyst put the question to CEO Jeff Green. He responded by reminding investors that Amazon has a vested interest in promoting its own digital ad real estate. He went on to say, we don't have any media and we don't grade our homework. The trade desk independence is the key attraction for advertisers. To me, that's a pretty weak response, if you want me to be honest. In addition to that, changing of the guard, new CFO. And then, of course, the valuation. Now, here we're going to look at a PE ratio of 66. You also have to remember we got recurring revenue that is involved with this and SaaS. This is a unique company. It always has traded at a higher multiple. I've owned this since 2019. Now, this will be a debate that you see online. The early investors that bought into Trade Desk 2016, 17, 18, 19, I invested in 2019. The early investors are going to say, well, hey, if you bought this at the IPO in 2016, you're up 1,700%. And although that's true, the stock has been a dog recently. What you really want to know is whether or not the stock is a buy right now. Let's take a look at a chart. Now, when Trade Desk was $141 a share, up here, I said, hey, do not chase air pockets. You got this trend line. Oftentimes, these air pockets get burst. The stock sold down all the way to $42.96 from $140. Breathtaking drop. And then ripped from $42.96 to above $90. Over 100% gain from April. And now going back to the same levels. Where are we going from here? Well, we know that this first line of potential support was around 53. We've already blown past all these Fibonacci's. The support 3 is like 66. We're way below that. The low, of course, in April, $42.96. Is it a buy right now? I prefer it $50 or less DCA, but you might not get under 50. You got to use dollar cost averaging, and I would say if you don't have a position, this would be a potential area to start adding. With that said, this might not be for every portfolio. This might not fit your DNA. It might not fit your time horizon. If you're looking for a quick win, this might not be your huckleberry. This is a long-term investment if you invest at all, and there are definitely risks from competition. I do believe in CEO Jeff Green and and team, and I think this stock will do well longer term. Now, is the Trade Desk my highest conviction stock in my portfolio? Absolutely not. And the fact that I've owned it since 2019, I've made good money on it, it probably does influence my bias a little bit towards the stock. This has been a dog recently, and it probably isn't for most people unless they really believe in the team, they've done their homework, and they have conviction in the business. Number 3, Confluent. I do believe that this sell-off is an overreaction. We do have a nice pop here, 4% today, but we have been buying this in the community portfolio. Several members in Discord have been buying this stock as well. You can see the stock is down 41% year to date, and it's basically dropped over 30% since July 30th. Oftentimes when stocks sell off hard like this, it takes a few days to consolidate. I think it's a good time to get, especially under 16. I'll look at a chart here in a second. So overall, the quarter wasn't terrible, but a few issues here. So the guidance, of course, was a little bit light. We have a slowdown in cloud growth. We were expecting 30%, we got 28%. Customer specific challenges, this was a big component of the sell-off. So one digital native customer is transitioning from Confluent Cloud to the self-managed platform. Remember, this is a self-service platform. Of course, you got analyst downgrades, which is also going to add fuel to the fire, more selling. And then overall, I think it's because SaaS stocks have been selling off really as a basket. And the reason for that, I believe the reason is fear that AI is going to completely disrupt and completely replace software. Now, of course, you're going to have mixed feelings on this depending on who you talk to. I personally believe that if you look in 6 months to 12 months, that the narrative is going to change from AI is going to eat software to software is actually going to help with AI adoption. Now, I could go down a rabbit hole and spend an hour on this, and I won't right now. But I do believe the best of breed stocks, and I post this in Discord with some explanations of what I'm talking about, which stocks to look for. I believe the best of breed stocks, the highest quality, the profitable names, those are going to be the ones that are going to prosper when you look at the other side of AI. AI is going to be integrated in everything. Now, the question is, will Confluent be one of those winners? I would call Confluent more of a fringe play. It's not a tier one, not one that I would focus on as the best of breed. I have to own this SaaS company. We own this in the community portfolio, been nibbling, but it's still only about 1.15% of the portfolio. It's very small. I consider it speculative. So Confluent is one that I've liked for years, and it has been a laggard, and I've admitted to that. It's traded really in this range. Look at these two blue lines here. It's traded in this range for years, going all the way back here to 2022. In fact, if you look here in 2023 in the fall, the stock got down to 1469, and just recently it got really close to that. The 52-week low, $15.64. Now looking at the Fibonacci supports, you can see the S2 here is 1466, which would basically get you back to those November 2023 lows. And then the S3 Fibonacci is 1073, which I do not think will happen. I think there's a decent $15 kind of floor area unless something catastrophic happens, more news. Now this is not going to be a quick win again. So, I mean, if you're looking for best of breed, the highest quality names, those are not going to be on sale right now. If you think of Palantir, it's not on sale right now. That's a stock hopefully you bought at 10 and maybe you're trimming at 180 bucks a share. Now you can make the argument, why would I run out and buy something that doesn't fit my blueprint? Well, you shouldn't. You shouldn't do that. The question is, does this stock, any of these stocks that I'm covering today, do they fit your blueprint, your DNA? Is it something you really understand, that you have conviction and you want to own? Because again, the highest quality businesses, the Mercado Libres of the world, the Nvidias, the Palantirs, these stocks aren't on sale in this market. So if you're looking to buy stocks, I like to go against the grain, and these are the names that I'm buying in the community portfolio at these prices and lower. Number 4, GitLab is another stock that I've been buying. Now this thing's been a roller coaster. You can see, $78, $73, drops to 37. Another one of these that's kind of been range bound for a while. I do think under $40 DCA is a very attractive price for this stock. If you look at the S3 Fibonacci, 3746, the previous S3, 3446, so maybe it goes below 35 at some point. It's hard to say, but you're getting to a point where it's very attractive. You look at the valuation metrics. I'm not sure if you can see out there, but my family's at the pool and they're kind of getting impatient, so I'm going to start going through this a little bit faster. But this is the 4th pick. I've been buying this. And this has been actually in the main portfolio. We do not own this in the community portfolio. I own it in the main portfolio. That's my, what is it now? $3.1 million portfolio at this point. In the main portfolio is where I have GitLab. Number 5, another stock, again, all the stocks I'm covering today, may or may not be a great fit for your portfolio, but I do like this one. I'm buying it in the community portfolio. It's Clearwater Analytics. The ticker is CWAN, C1. This was a $35 stock. Of course, it got pumped up here on AI hype. There's a lot of fear. There's a lot of uncertainty because of mergers and acquisitions. I do believe they can unlock some potential power from this M&A. This is a very unique SaaS company. It has a very unique sales cycle, selling into institutions. So you'd be selling into actual institutions that are doing stock investments and things like that, right? So this is SaaS, but very long and slow sales cycles, very unique company here. But anything under $20 a share, I told you guys, I did a write-up a couple months ago. I said, hey, there's a good chance it goes below 20 after earnings. That's where I would buy it, under $20. So I started buying it around 21, been buying it heavier here under $20 a share. And you can see this S3 is $18.40. It broke that. The next area of support is going to be 1763. This is back to July of 2024. Could it go lower? Could you see in the 15s? It's very possible, but I do like this under 20 DCA, thinking 2 or 3 year investment, long-term investment. As always, use DCA. I've also been buying Eli Lilly. This is pick number 6. Eli Lilly, been buying this in the community portfolio. This is another one, hey, don't chase air pockets, $972, a little too expensive for my taste. Down here in the 600s, especially if you can get it below $600 DCA, that's where I'd like it. But it looks like it bottomed close to $625, trading right now around $644. Again, you can get it $600, the close to $600 or under $600 per share DCA. I think longer term be a good investment. Could it drop lower? I think if it does take a leg lower, you're looking probably around $600. That's a psychological level. So you might see like 590 or something like that, maybe 560, but more than likely it's going to hold up kind of where it's at around the $600, $625 level. And I think it will go higher with time. Next, I'm going to give you a 3-for-1. I'm going to share the stock I'm buying, but then 2 other stocks that community members are buying that you might want to explore. So the one I'm buying, number 7, Qualcomm. If you've been following the channel, I've been buying this stock. I like it. Under $150 DCA as a long-term investment. Again, subscribe to the channel, go back, watch some previous videos, get some due diligence and understand why I like these companies. There's a lot deeper dives. I'm on vacation right now. I'm not going into deep dives on any of these. I'm just covering what I'm buying now to get you updated. And then 2 stocks that community members are buying in Discord. This is ServiceNow. And you can see right now it's trading around $850 a share. So it did break this S3. It's kind of fighting back right now. Of course, in April, it was even lower. It was $676. I said, hey, this is an area to buy. But this blue trend line, you don't chase, don't buy, don't chase the air pockets. You're below the blue trend line right here. So I would say if you don't own a position of ServiceNow, this could be an area to DCA. Now, Cava is selling off after hours. Here's a couple updates here in our Discord. You can see it's down 22.27%. It's trading at $65.68 a share. I don't own this. I'm not buying it. I'm a part owner of a restaurant. I've got enough restaurant investments in my world, but a lot of members in our community like this stock. They are nibbling this stock at these prices. It's something that you might want to explore. Looking at a chart post market down here at 66 bucks. We've broken through most of the supports. No man's land. Can it go lower? Sure. And this is a newer IPO. This is a newer IPO back in 2023. You can see it went from $37 all the way up to $172. Huge air pocket, back to life. So when you're getting below 70, we had a $70 kind of floor here. Hit 73, 70, 71. We broke that at 65. Can we go lower? Yeah, because it looks like it's potentially broken at this point, but it might be an attractive area to buy the stock after massive consolidation from $172 highs. Please do me a favor. If this video was helpful, make sure you subscribe if you're not already a subscriber. Click that bell for notifications so you don't miss the next video. You never know. There could be another video from Hawaii. And if this content is useful, please return the favor. Drop me a like, drop me a comment. Thanks for watching. Have a great rest of your day. Take care.